What an absolute disaster for the stock market today, guys. Holy freaking crap. We got a lot to break down in this video. We got to break down charts, stocks, earnings. But before we do, make sure to get your free money from Moomoo, up to 5 free shares of stock, each up to $3,500. And you also have a chance at a free share of Twitter. All you have to do is use my link down below or go to stocksurfest.com/Moomoo, deposit at least $100, and just like that, you get your free money. And with that being said, cheers, guys. Let's get right into the video. So check it out. The markets completely got just freaking mollywopped today. I don't know how to put it, guys. It was an absolute disaster. SPY went down 3.5% at the close. NASDAQ down over 5%. The Russell down 4%. And we had the Dow. I'm mixing up my indexes, guys. That's how bad it was today. The Dow went down 3.1% as the VIX went up 22%. And we had gold and silver, which is why I like having a little bit of gold around, guys. Gold up 0.5 and silver up about 0.5%. So they did just fine today, and I'm assuming, let's see oil, guys. I actually didn't check oil. I forgot today. I don't know why. It looks like oil did well as well. So oil, silver, gold, commodities, they did well today, but clearly the equity market did horribly rather, and the VIX dang near went up 25% on the day. So let's see on SPY. Let's pop up the intraday chart and kind of see what ended up happening more towards the end of the day. You guys can see here the rally really got started, and by rally I mean we didn't get a rally. Don't get it twisted, guys, but we got a little bit of a rally into the close, which took the markets here from in terms of SPY from 409 to about almost 415. So a decent rally from about 3:30 p.m. on the East Coast to about to where the markets closed, right? So a rally at about $4-ish, or in other words, 1%. But don't get it twisted again, guys. Today was a complete disaster, and it looks like this bottomed out at 409 on the intraday chart. So essentially, we downtrended all day until about 3:30 p.m. So SPY hit 409, rallied into the close. We closed at about 413.80, and guys, you guys know at this point, 20-day chart is still in a downtrend. We're now under the moving averages. Same thing with Triple Q. And if I pull up the intraday chart on Triple Q, what we can see here is this went from pre-market 329 to the low of the day 309. So intraday today, Triple Q lost 6%. Well, not only intraday, I guess, including the pre-market as well. So 6%, guys. That is no joke, and we're pretty much right at the lows. Or did we take the lows out? Yeah, I mean, look at that. We took the lows out today, guys. So fresh 4-hour lows here on Triple Q, a fresh 52-week low as well, and now we got to pull up the 3-year chart to see where we could be going next. I mean, looking at this time frame back in February of 2021, about a year and 3 months ago, we got to, where was it? Roughly 300 a share on Triple Q. Right, which means now that we're at 313, it could go down another $10-15. That would be the next main support that I'm looking at. And if that point breaks, like I said a couple of videos ago, if this sell-off gets really ugly, guys, if this continues, this could go to the 180 SMA on this 3-year chart, which is right around 270, 275. That implies, if that does end up happening, that is, which is not guaranteed, that means 13%. There could be 13% more downside if Triple Q goes from 313 to about 270, 275, which at that point, guys, I would be going pretty heavy into big tech. I'm already buying, Google here at these levels. I'm nibbling. But if Triple Q got down another 13, 15%, we're talking Apple and Microsoft. All the big dogs are going to be down even more at that point. And obviously small caps, mid caps, they're going to get hit even more. There's going to be a lot of value at that point. Let's put it that way, in my opinion, at least. If Triple Q falls another 15%, there's going to be a lot of value in the market, at least based on, the way I'm looking at companies, right? Which we all differ in terms of valuing stocks, guys. That's the thing. It's not black and white. I guess there's a lot of gray area. There's a lot of nuance. A lot of people do it different. So there's not going to be one way to value a stock, and there's not just one valuation for the overall markets. A lot of people do a lot of different things, right? And based on what I've come to, I think if Triple Q comes down again more, I don't want to just keep pounding on this topic, but there's going to be a lot of deals opening up. Let's put it that way. So what do you guys think? Drop me a comment, smash that like button if you haven't done so already, and make sure to subscribe. We're about 20 subscribers away from 25,000. We're almost there, guys. Almost there. So close. Make sure to subscribe. And with that being said, let's break down some earnings. We had some companies today report, and some of these companies I haven't talked about in probably months, for some of these. And number one is Square, which we actually do talk about. I don't want to say very frequently on my channel, but we cover it here and there. And this stock, well, I guess it's now called Block. Sorry, guys, if you own Square, or Block, rather. There I go again. It's technically Block, but the ticker symbol is still SQ. And look at this. Today it went down 10.5% on the day, closed at $95, and now after the bell, looks like we're up a little bit. Look at that, guys. Square's up to about, and there I go again, calling it Square. We're just going to call it Square, guys. Screw it. Square's up 3.5% after the bell right now, and it did get up about 10% as the stock shot to $105 after they reported earnings. So check it out. They actually had a double miss. And the stock's going up. That's interesting. They did 18 cents on the quarter versus 21 cents estimated. Revenue came in at $3.96 billion versus $4.14 billion estimated. So double miss for Square. I'm not necessarily seeing anything on guidance, but that's what we're getting, and the stock's moving up. And look at this. This just popped up for me. Bitcoin revenue down 50% year over year. Oh my goodness, guys. Bitcoin revenue down 50% year over year. And that goes to show, I'm not bagging on Bitcoin or crypto. But it's very volatile. That goes to show. And it's kind of like there's a lot of hype around it. So if the hype starts to die down, people aren't, making as many transactions using Square, using Coinbase, using, these other platforms. If they're not making as many transactions, buying, selling, these companies are going to get hit in those segments of their business. In this case, Square, Bitcoin, crypto is not the only thing they do, but for companies like Coinbase, it's going to be rough for them because they're definitely going to get squashed year over year. And again, Square's getting squashed as well. It's down 50% year over year. Bitcoin revenue, oh my goodness. So yeah, that's not good, but it seems like the market's kind of expected that, as Bitcoin is down. What is it down from all-time highs? 30, 40, 45%, something like that. Maybe it's actually down 50% at this point. So that makes sense to me completely, and obviously the markets have priced that in. So for Square here, guys, I'm going to set my alert at $120 a share, which, believe it or not, it was just there recently. About, where was it? It was actually at 150 recently, about a month and a half ago. So I'm going to put it at 120 for now. That's right by the 180 SMA. If that point breaks from 120, I think Square could start making a move back to $150 a share. So we're watching that one. Fubo is one that we haven't talked about in a while, guys. FuboTV today went down $10, or 10% rather. And geez, man, this is now a penny stock. That is crazy. The last time I checked, this stock was at least $10-15. Now it's $4 a share. Just look at how quickly that bubble. Well, I guess it wasn't quickly. It took about a year and a half, 2 years. But just look at how that bubble popped. This stock was $62 a share back in September. What was that? That was pre-pandemic. Or actually, no, that was not pre-pandemic. That was about 8 months after the pandemic, 9 months started. It was in December of 2020. The stock was $60 a share. Now it's at $4. Talk about just complete and utter destruction. This stock is down 94%. You might as well just go to the freaking casino as opposed to buying FuboTV, or at least, with hindsight, right? With the benefit of hindsight. So Fubo is down 10% on the day. Well, it went down 10% on the day. And now after the bell, it is down even more. It is down another 4 to about 5% after the bell. So they did Q1 North American sales of $236 million, which is up a surprising 98% year over year. So that's growing a lot. And 305,000, they have 305,000 total paid subscribers, and they ended the quarter with $456 million in cash. And this is a great example of a stock that just got way overhyped, and at the end of the day, it was just not worth that price. $64 a share. There's a lot of free money. There was a lot of free money, and there still kind of is a little bit, but not nearly as much as there was. And people were buying stocks left and right. People were just gambling, and that's why a lot of these stocks blew up into bubbles, and now they're at, you could argue, fair value, or they got to where they should have been in the first place, right? A lot of these stocks like Fubo, and we can go on and on and on and talk about a lot of stocks that, quite frankly, Cathie Wood owned, and she still owns them. And I'm going to make a video about Cathie Wood, I think, very soon here. I don't want to bash her because that's not my style. I'm not trying to hate or anything, but we're going to have some fun with it. Why not? We're going to have some fun with it. So be ready for that, guys. Be ready for that. Lucid is stock number 3 for this video. Let's talk about what is going on with Lucid Motor. They just reported, or it's called Lucid Group. Sorry, guys, Lucid Group. They just reported, and the stock seems to be up a little bit. Nothing crazy, up about a dime, 10 cents. Really nothing crazy at all. Lucid did EPS of -5 cents versus -30 cents. Estimated revenue came in, and mind you, that's a nice beat on EPS. Revenue came in at $57.7 million versus $53.43 million. So nice double beat for Lucid. And the stock is now up 12 cents. It was 10 cents. Now it's 12 cents. And it's not really a big move to the upside. I'm not really seeing anything on guidance. It looks like they lost, or what is this? Net loss slashes on revenue boost. Yeah, we're not going to get into that. But overall, it looks like double beat for Lucid. And clearly this stock has been in a downtrend for months, and this was one that was also, you could put it in the Fubo category. It was pretty hyped. It got up to about, where was it, $65 a share. It did that twice. It got to 65, then it got to about 60, and now it's back to, where is it, under 20, $18 a share. And you could argue it's still a little bit overvalued. I mean, I haven't ran numbers on it, and quite frankly, it's very hard to run numbers on companies that are newer to the market. They're unprofitable. You don't have many years of data on them, right? So it's hard to run numbers. But Lucid, it's still well above that $10 level where, because this was a SPAC, right? Initially SPACs are worth around $10. Whatever. We're not going to get into that. But you guys got to realize Lucid is still very early days. They're losing money. They got a lot to prove, and we'll see. In the next couple of years, we shall see. But one thing worth mentioning is if we're going into a recession, which I said a couple of days ago, I think we're already in a recession. I just think so, and I've thought that for probably a good month or two at this point, at least. If we're going into a recession, guys, nobody's going to be putting down. Well, people still are. Obviously, there's a lot of rich people out there, and this company, I guess, caters to rich people. But if we go into a recession, maybe people are not going to be buying as many cars. Lucid, even Tesla could get hurt by that, let's be honest. And a lot of companies are going to be hurt by that if we're already in a recession, which, again, I think there's a very good chance. I'm not going to say 100% chance, but there's a good chance, in my opinion, that we are. So the next one is Opendoor. OPEN is the ticker. This went down 11% on the day, and it's actually up a nice $1 after the bell. Look at that big move, up about 15% from $7.15. Now it's at about $8.20 after the bell. So Opendoor did EPS of 4 cents, which is the first profitable quarter, it seems like, or at least looking at these past couple of quarters. Out of the past 3 quarters, this quarter they just reported is the only profitable one, and that 4 cent was compared to the -13 cent estimate. So they beat on EPS, and they beat wildly on revenue, 5.6 5.2 billion versus 4.29 billion estimated. So the stock is up again 15% after the bell. Now it's trying to make a move above. It's already above the 50, but now it's trying to break out of the 180 moving average, which I think if this succeeds in doing so, maybe we start making a move towards $9 a share, which $9 was resistance in the middle towards the end of April. So I'm going to set my alert right now. I'm going to put it at $8.30. We'll see what it does at $8.30, and we'll watch it from there. Let's see MercadoLibre, because I think they reported earnings as well. Yes, they did. It looks like they did $1.30 in EPS, which missed the $1.35 estimate. Revenue beat, though, $2.25 billion versus $2.02 billion. So a nice little mixed bag report from MercadoLibre. And just like pretty much all these stocks, guys, this has been in the gutter. From $2,000 a share back in September, it just hit $9.80. It is down. It went down 10% today. It seems like all these stocks went down roughly 10% on the dot, which is kind of weird. A lot of the stocks we talked about today went down 10% on the day. So Mercado is up, it seems like, even though they missed on EPS. They are up about 7-8% after the bell. So I'm going to set my alert on this one. I'm going to put it at about 1100, 1150. Let's just do 1150. Mark is at or above. That's slightly above these moving averages on the 4-hour chart. So we're watching that. Good old Doordash is another stock here. They did 48 cents, negative 48 cents versus negative 41 cents estimated. So they missed on EPS and they missed, actually no, wrong. They beat on revenue, guys. They beat on revenue. 1.46 bill versus 1.37 bill estimated. And just like the other stocks, this one is down in a big way. It is down about 70% from that recent 257 high. It's under the moving averages. We have the death cross. This is not looking good. But I guess one good thing is, and look at this. This stock also went down 10% on the day. What the hell's going on? Dash is down 10% on the day. Let's run through these real quick. Melly's down 10% on the day. Opendoor, 10% on the day. Lucid, don't tell me. All right, that's 7% on the day. Fubo, let's go back to Fubo. Fubo's 10%. Same with Square. Literally all of these stocks went down 10% other than Fubo, which is kind of weird. But anyway, going back to Doordash, it seems like it is up a little bit after the bell. It is up, let's see here. It went down 10% on the day, but it's up 8%. So it pretty much wiped out that entire loss, or gained it back rather, which is solid. So let's see what Dash ends up doing tomorrow, the next couple of days. If we start getting back over 100 right by those moving averages on the 4-hour, that's going to be a big spot. That could be where this starts breaking out. So I'm going to put my alert. Mark is at or above $100 a share. There we go on Doordash. And let me see, did they report guidance or anything? Guidance? No, I'm not seeing anything on guidance. So the next one here is Virgin Galactic. Don't tell me this went down. Don't tell me this went down 10%, guys. Let me see. Oh my God, pretty dang close. 9.2%. Virgin Galactic went down 9%, and this is the epitome of a stock that has gotten massacred, right? This is a stock that used to be $63 back in 2021, February of 2021, and it's gone from that point. Now it's all the way to $7.50. In other words, it is down a lot. You guys, what do you want a percentage point? Fine, I'll give you a percentage point. It is down 86%, guys, which is unbelievable. So Virgin Galactic, you all know, you should know at least, they're burning money left and right, losing money every year, and they're not really doing anything in terms of revenue. So Q1 adjusted EBITDA loss was $77 million versus the $56 million in the same quarter last year, and it seems like the net loss was $93 million versus the loss of $130 million year over year. So you guys got to realize they lose so much money, and I'm not some kind of NASA astronaut, somebody that knows so much about space and what Virgin Galactic. Well, I know what Virgin Galactic does, but and obviously a little bit about NASA or whatever. So I don't know a lot, but you don't need to know a lot to know that going to space, doing these missions, right, that Virgin Galactic's been doing, every so often, getting people up to orbit or just under orbit, whatever, because technically they don't really go to space, Virgin Galactic, but doing that costs a lot of money, right? That's why they're burning money hand over fist. And if we're in a recession, guys, companies like Virgin Galactic, they could just go under. They could go bankrupt. You guys got to realize this, because yes, they cater to very wealthy people, but people might not go on these trips during a recession, right? People might, rather put that money into, rich people might want to put, buying a rental property or buying, more stocks, as opposed to spending $250,000 to go on Virgin Galactic flight. You know what I mean, guys? So I guess that's it for this video. We're about 20 minutes in. Perfect. If you all enjoyed it, hit the like button, subscribe. We're almost at 25,000, guys. And make sure to join my Patreon and get yourself some free money from Moomoo. Up to 5 stocks, each of which could be valued all the way up to $3,500. And you have a chance at getting a free share of Twitter. Just use my link down below or go to StockSurfest.com/Moomoo. Deposit at least $100 and you get your free money. And with that being said, I guess that's it, guys. We got to recover and get ready for tomorrow, because these markets have been a freaking war zone, and we got to get ready. So I'll catch you in the next video. Cheers. Thanks for watching, guys. Peace out.